Hi and welcome to Academic Compliance Academy of Anti-Money Laundering. So in this video I'm going to talk about the Hawala system and money laundering, and also just have a short reflection on whether or not we should regulate this area. So the Hawala system has its origin from Southeast Asia and the Middle East and served as a kind of a payment system in the older days, and it still serves as a payment system in the modern usage. Today, though, the primary kind of purpose of the Hawala system is to supply kind of financial means and a payment service system for the regions in the world, the rural areas in the world where there might not be access to an actual banking sector. So, the key characteristics of the Hawala system is that it's an informal money transferring system. So there's no demand of registration or anything. It is quite based on the informal character, and it is a trust-based network where we have agents around the globe where they all serve kind of a collaborative in a payment system network. They trust each other. There's a high level of trust, and because it has this informal character. So there have been some documentation of low transaction costs, and that would be, when we talk about low transaction cost, it might not be the actual transaction per se that has a low transaction cost, but in terms of an alternative way of transferring the means that you needed to have an access to the formal banking sector. There's a high level of anonymity and privacy in the Hawala system. Typically, payments are done with the mere transfer of information of a kind of a code or similar, so we don't need to register the beneficial ownership or anything else that we know from the AML regulatory area. It does have a global reach, and we have seen cases in Europe to Southeast Asia, to Africa, and even to other regions of the world in this organized trust-based Hawala system. So how does it really work in practice? Well, we have two regions or two countries, country A and country B. We have a sender of money and we have a receiver in another country or region. In both countries, there will be a Hawala, so a Hawala agent. So what happens is that the sender will go to the Hawala in country A, deliver a certain amount of cash. Of course, here there will be some sort of payment for the service. Then the Hawala will contact Hawala B and ask the Hawala B to pay out a certain amount, of course also with a reduction of service cost, to the receiver. In meantime, we have a remittance code going the other way around, or some kind of identification that could be something that you can transfer through a text message or phone call or something between the sender and the receiver. So, of course, the Hawala in country B knows who the receiver is, and the receiver can identify in some kind of measurement or coding. So this is basically the system. Of course, there need to be a balance on the cash in and out, and that might ensure that the Hawala A and Hawala B needs to have some occasional settlement between them in case that it doesn't even out. So this is basically just an old-time payment service provider. So it's not that far off the idea. It is just not within the formal banking sector, but it kind of works in the same way. But as you can see here, there's a lot of areas, there's no requirements, no regulation or anything like that. So when we talk about money laundering and Hawala, where Hawala really has come on everyone's lips because of, oh, there's a money laundering threat here. Well, the threat is not the Hawala system in itself. It is because there are almost no documentation. There's no requirement for documentation because Hawala is not regulated. You don't have regulatory requirements. On the opposite, for example, the EU, it is illegal. So you will already have someone operating outside of the regulated scope. Hence, why should they have any documentation? The only documentation they need is to secure that they gave the payment from their service. Also, so when we talk about this system, because there's minimal documentation, it can serve as a part of the layering process in a money laundering scheme. Because if you can transfer money without any trace between two regions or two countries, well, then it becomes hard to backtrack if that money comes from illicit purposes in its origin. Hence, it will be hard to prove that it is connected to money laundering. Also, that this Hawala system has reached a global network stage, of course, makes it optimal in terms of money laundering. Again, the informal structure, the informal nature of it, because we do not track it, because we do not register, because it works on this trust-based system, again, this serves the whole kind of disguise, limited amount of information. There's not really a structure that we can assess, because basically it would be the same as if I call a friend, say, well, could you pay my mom a certain amount of money today? And then we do a settlement later on because I'm together with my dad and he asked me to kind of send money. So, it's not that hard to really grasp. But the problem is that there's no tracking and this informal nature. So, should we regulate Hawala? Well, in the EU, it is illegal. And then we could say, so should we regulate it instead, as we have done with, for example, crypto? So where we kind of include the Hawala system in the regulatory area, or should we just limit, like we already have, a restriction where we say it's illegal? Well, there are some positive and negative sides on this. So, of course, if we kind of embrace the Hawala system and regulate it, well, it could help us limit money laundering and terrorism finance, because we would transfer the informal structure and trust bed into a very formal and documentation and everything like we've seen in the crypto area. And it would also kind of enhance customer protection and financial stability. On the downside, when we talk about regulation, well, it kind of demands that everyone has an access to the financial system. Because what we have done, for example, in the EU is that every citizen has the right to a regular bank account. But you cannot secure that in rural areas in the world where there's no banking sector. Here they still need some access to financial services. Hence, there will still be a market for Hawala, even if we regulate some of it. Because some of it actually works outside of the system, because outside of the formal banking sector, there might be, or there are areas that are too excluded, but they still need kind of payment service and financial products. So we can see, okay, should we regulate it, should we not? Well, of course, there's pros and cons with everything, but where the problem lies is that we need to then offer some kind of securement, and if we regulate Hawala, we're just including them in the established banking sector. But right now, the best purpose of Hawala, the good effect on the economy, is that it operates outside, giving access to those people outside of the banking sector. So it's not really an easy question. So, but this was just a video on Hawala and kind of the connection to money laundering and whether or not we should regulate. Stay tuned, subscribe to this channel, and let's talk much more about money laundering.